Alright, what's up guys? Gaddy Trades here. Usually I don't make these kind of videos where I do trade reviews because I trade live every single day, but I do think there's a lot to be learned or to be shared just based on today's price action alone. I think today was very, very clear, and I want to just shed some clarity on what exactly happened, how I caught around 100 points, and I will say I did really mess up my trade management. We really could have caught a larger move. I broke even too early on specific times, so we could have caught really a larger move if we just trusted the idea more and gave it some room. Nonetheless, we still caught 100 points, and I'm gonna go over my mistakes, and I'm gonna actually go over the entire price review and what happened starting at the weekly chart. So the reason I was bearish today, and starting from the top down. So first things first, on the weekly chart, the two major things I see is this weekly inversion fair value gap, right? Very visually easy to see. And something else, if you noticed, is there is a reclaimed bearish fair value gap right here. So this used to be bearish fair value gap, got inverse, and we reclaimed it to be bearish. So those two kind of main areas of interest give me like a soft kind of context for a potentially bearish week. We inverted the weekly inversion, and we reclaimed this fair value gap as a bearish fair value gap. So I'm expecting lower prices this week. So going into this week, I was primarily bearish. So let's transform this weekly inversion onto the daily chart and let's see what we see. So this is your weekly inversion on the daily chart, and you can see price inversed here, and we came back Monday, Tuesday, and I was bearish today on this Wednesday. So let's see what happened here. So we can remove this daily inversion, and we can kind of mark out these key levels on the daily chart. So we have this daily inversion fair value gap. I'm going to mark out the high, and I'm going to label it right here because this is important for today's price action. And on top of this daily inversion, we have this bearish fair value gap right here that got inversed here. But like you said, we talked about earlier, is you have to kind of include this volume imbalance inside because there's a volume imbalance here. If you click on toggle set, you'll see this volume imbalance. You cannot ignore this volume imbalance. This was our point of interest for today's trade, where we framed the trade off of and why we did not expect certain things to happen and why we expected other things to happen. So we're going to mark out the daily volume imbalance. And the last thing we're going to mark out is previous day high. Now there's a lot of things you can frame your trade off of here, and I'm going to go over all of them, and whichever you saw, maybe you would use that. So we have the daily inversion high, the daily previous day high, the daily volume imbalance, and the last thing we have is this daily SIBI high. And was there anything else I wanted to point out? I think that's it for now. So we have these levels all kind of relatively in the same spot. So what's happened in the week so far? Monday opened up and traded higher. We barely have a significant low. We didn't even take out previous week's low on Monday. So we've only pretty much expanded. Tuesday came back to almost a discount of this range and came up even more towards the volume imbalance, completely filling up the daily SIBI. And remember, the weekly inversion fair value gap is over here as well, and this daily inversion. So that's basically what's happened here. Is Monday and Tuesday is we're only trading up. On a week, we're expecting lower prices. So potentially we could have Tuesday high of week and reversal, or Wednesday high of week. Now it could be Thursday, given that today was CPI, I was expecting a large range. So this could probably frame the expansion towards the downside in this sense. So let's narrow it down to what actually happened on this time frame. So it's CPI today. Now what happened over here is we're just going to go here and replay mode. And this is not replay mode. This is not hindsight. We traded this live. So I'm just doing a trade review. Otherwise, I wouldn't even be doing this. So 8:30, we have CPI candle. Initially, we expand up and we tap into the daily inversion high, the daily volume imbalance, previous day's high, and what actually happens at this point of interest. So as soon as this happens, so my eye jumps up to the first thing, which is the regular trading hours gap. So I'm gonna mark out that gap, and you guys can see how the level of confluences in this trade today was absolutely amazing. So if you don't know what the opening range gap is, it's the previous settlement close in regular trading hours. So we closed over here and we opened up over here. This is your regular trading hours gap, or your org gap. So noting this at 9:30, that's my trading window. what has happened right here? So 9:30 open, we formed the opening range gap. We already tapped into the daily inversion high. Notice we're also in the weekly inversion, and we have this daily volume imbalance where we tapped into. And if you can see, we kind of slowed down and we didn't even get to 25%, I believe. We didn't even get to 25%. We just fell short of 25% of this daily volume imbalance. To me, that shows weakness. The fact that we had this rollover before getting to 25%, to me, that showed weakness. So in doing so, we're trading below previous day high right now. It's 9:30 and we've already manipulated up. Now, a lot of people think 9:30 means there's going to be a Judas swing. Not in all cases. This is one of those cases. So 9:30 goes down right away. We come back up, undo that move, right? We have a little bearish fair value gap right here. We've already taken out the buy side. We've already manipulated up into the daily inversion. It could come up here and take out this high. I was being patient at this specific time, but I want to draw your attention to what happens here. We come up into this fair value gap, instantly reject lower, and we have a chain of stay delivery right here. This is now a bearish order block. I'm going to show you guys the level of precision in this algorithmic delivery. So this is your opening range gap. We're going to mark out 50% of it as well. So look at this. We formed a breaker in the lower time frame here. So this high, low, higher, high, lower. This is a breaker. This is an order block. This is a fair value gap. This is 50% of the opening range gap. This is overlapped with previous day's high and playing off of the idea of, let me just mark this properly. And this is playing off the idea of the weekly inversion, daily inversion, and noting that daily volume imbalance as well. So we have this imbalance overlapped with 50% concentrated encroachment. And this is where I took my first entry. Right here, as soon as price came in, look at the body respected really nicely, and we get that initial rejection. This is now a bearish order block. If you missed that entry, you can trade this as a mitigation. Low, high, high, low, lower, low. That's your mitigation. That's your bearish order block. You can take that trade right there, and your stop loss would have to cover the order block and the fair value gap. So you could have taken a trade there. And I actually, so my mistake here was I got put in break even here. I should have not broken even, and this is why I said I missed out on some profits. However, we still caught the move, but we did end up breaking even. So you can see we tapped into the 50% org, the previous day high, the order block, the breaker, the mitigation. It's literally everything is overlapping here. Pretty much every PD array I've ever seen has overlapped in this specific price action. It's really clean delivery, and drawn liquidity being the sell side, but knowing that we're bearish on the higher time frame, because remember we said Monday, Tuesday manipulated, we're thinking Wednesday is going to go lower. Where could Wednesday go? We have this volume imbalance as a minimum, and I would also expect previous day low, which is where I took my final runner. I actually caught a little bit more, but I was aiming for previous day low. So what happened here? We had the fair value gap, we broke down. Now let's say you did not catch a single move. So I took my first full close right here. We formed an SMT at this low. I thought maybe we'd have a deep retracement, and I did not want to hold on to the trade through a deep retracement, especially because I'm already in drawdown in my account. I want to secure some profit. So I took this off of the SMT, and I was looking for a re-entry because I'm still bearish. Like, until we come all the way down here, then I won't be interested in longs, shorts. So what happens is I'm waiting for 10 a.m. Why am I waiting for 10 a.m.? Is because I'm expecting the 10 a.m. candle to be bearish. I'm expecting 10 a.m. power of 3. So 10 a.m. open, high, low, close. If I'm expecting that, I want to see a potential setup above 10 a.m. or around 10 a.m. open. We had this move at 10 a.m., failing to take out these highs. I didn't actually short any of this because I didn't think that was enough manipulation. So I waited. And then we formed this imbalance, and I said, okay, we could potentially see a short setup here, thinking that we're just going to remain heavy. Now, this is a premium entry, but it's in the right context because it's still 10 a.m. power of 3. We did have a wick up, respected this order block mean threshold, and we went lower. I'm not expecting it to come all the way back up and then all the way back down again. To me, that is very unlikely, and I'm willing to put risk on the fact that this fair value gap is going to hold. So what did I wait for? I waited for this 5-minute. So I marked out this 5-minute imbalance. Now, I'm not going to put a limit on this imbalance because it's too large, and I don't want to put my stop loss at the high. So what did I do? Well, I marked out the 5 minutes, and I went down to the 1 minute, and I waited. And I saw this, and we never tapped in. We actually did get an SMT right here, but even without the SMT, I'll explain to you how I entered this trade. So we had an SMT, but we also had a 3-minute fair value gap form, two 3-minute fair value gaps. So I'm marking out these two 3-minute fair value gaps. I'm looking for the time frame alignment with everything I do. So I'm looking at these two 3-minute fair value gaps, and I'm thinking it could potentially come up into here. We do have an SMT, but I want to see how price reacts to this level. This is where I re-entered the trade. Remember, we're thinking 10 a.m. power of 3. So it's only 10:25. I'm thinking the low is going to form around 10:55, and that's exactly what we called on the live stream. I was looking to close around 10:50 to 11, ideally like 5 minutes before, because usually it'll start retracing a little bit early. So what happens here? We wick into this 3-minute imbalance. We did not tap into here, so I'm thinking potentially that this is going to hold. So I want to see what happens off of that 3-minute fair value gap. We formed another 3-minute fair value gap in the order block, and that's where I took my trade. So I waited for the retracement here, and it was just fair value gap actually. So kind of same scenario. There was two fair value gaps, and I took the lower one, but not on a limit order. So what happened was we traded into the 3-minute. I waited for a 15-second confirmation. So right here, basically this wick, I entered and I got a really nice fill. I pretty much caught the high right here. Like I pretty much got my entry right here. And in hindsight, of course, you could have taken this fair value gap. You could have taken, right? But for me personally, I wanted to wait for some type of move lower and then a pullback on the lower time frame, because I didn't know if it was going to trade up into here or not. And I don't want to put my stop all the way up here. So I could have missed this move, but I'm willing to risk missing the move for very precise stop loss and very precise entry, which is what I ended up getting. We got a very precise entry right there. And my first partial was previous day's low, and it was about like 2.5R, because we got filled right here. Stop loss was literally at this high, and first partial was at the low, and I held the rest of it to like 10:55. So we partialed right there, and I think like right at 10:56 when we closed the trade. So we got a little bit extra points, like maybe an extra 20 points. And after, it actually ended up reversing really nicely at 10:50. So 10:50 to 11:10 macro did retrace, and I was expecting a deep retracement, which is why I didn't hold through lunch, simply because, well, we left up all these imbalances, and you can see right now we're actually all the way back up here. So I'm going to be tape reading the rest of the day, because I've already taken 2 trades and they were both winners. Kind of the same idea with both trades. So I'm not going to be trading this, but if I had to make an assumption, I would assume that this was going to go lower, because nothing's changed except the fact that we're back into a premium now. I'm still expecting this to hold. If for whatever reason, we just have a full expansion week, I mean, that's possible, right? No one can predict the markets 100%. Anything can happen, but I would personally expect this to just simply be a retracement into the 15-minute fair value gap, and we probably go lower. That's what I would expect. And by the end of the week, I would probably expect this week to get taken. This previous week's low to get taken. The current weekly low, because we did not manipulate lower. However, that was a large move to the upside. We kind of undid all of that. So I do kind of wonder, but nonetheless, we'll see if this 15-minute rejection happens. That's a story for another time. I hope this trade review helped. I'll see you guys next time. Peace.